Bill, it's great to have you with us. Let me give you the floor. What is Jim Chanos getting wrong here?
Well, I think Jim maybe isn't aware that demand has never been stronger in our space. We've had record bookings the last 2 quarters. Our fourth quarter bookings were 156 million annualized. Our first quarter bookings were 167 million annualized. That's up upward 30% from the prior 4 quarters. And in terms of older legacy space, we're releasing that space to some of our most sophisticated customers at extremely high rates. So he calls us,
Bill,
he calls the customers a competitor. Go ahead, I'm sorry.
No, you go ahead, finish your thought.
I was going to say, he refers to the cloud service providers as our competitors, but we view them as our partners and they view us as partners. We enable their growth around the world.
Okay, Bill, but I think that his argument centers around valuation. He says that your company should not be valued like a premium REIT because you're not simply collecting rent checks. You're actually a very capital-intensive business. So perhaps you could walk our audience through your outlook on rental rates and how you can increase your return on incremental capital deployed.
We are increasing our rental rates right now. We've been pushing rates since the first of the year. We're pushing rates on new leases as well as renewals, and we're beginning
your outlook, though.
Our outlook is very strong. Absolutely. As I said, we've been pushing rates this year, and we'll continue to push rates. And our escalators are now being indexed to CPI, so we're hedged against inflation. I mean, when you think about data center REITs versus other REITs, our cash flows are basically a product of long-term leases with high-grade credits that are indexed to inflation, and residual values will be, I think, further protected by the current inflationary environment.
Bill, I'm curious about how much of the advantage that you have now in location, in pricing is durable, and to what extent you can expand your total addressable market, because arguably this is a valuation you're going to have to grow into, and I would expect that these hyperscalers are going to continue to make the case to their customers, you can do more with us in the facilities that we actually own. You can do less hybrid. Whether they'll be successful or not is an open question. But if you have a larger total addressable market, if you're able to build more unique technology or lower cost into your facilities, I imagine that would give you leverage. Can you do that?
We're definitely doing that. I mean, first of all, we're expanding around the world. And we're expanding into Africa. We're expanding in new markets in Europe. And then even in existing markets in Northern Virginia, for example, the largest market in the U.S., we're now building on our Western Lands campus, which will give us the ability to build up to 1.5 gigawatts of new capacity. And we have demand there from several of the largest CSPs in the world, who in the past, one in particular has tended to build their own, but now they're talking about leasing several fully improved data centers from us there.